If you're thinking about buying a home in Lancaster County, PA, you might be wondering how much you actually need to make to afford a house here. So in this video, I'm gonna be breaking it all down from median home prices to mortgage payments, so you know exactly what it takes to comfortably afford a home in this market. So let's dive into it. As of early 2025, the median sales price for a house in Lancaster County is sitting right around $332,000. That is a 7% increase compared to last year. So home values have been steadily rising, as most of you already know. So if you're planning to buy, it's important to understand what this price means in terms of monthly payments, down payments, closing costs, things like that. So let's say that you're buying a home at that median price of $332,000 and you're taking out a 30-year fixed rate mortgage at a 7% interest rate, which is around where rates are sitting right now. Your monthly mortgage will depend on how much you put down. So here's a quick breakdown. There are several options when it comes to mortgage lending. Sometimes as a first-time home buyer, you have more options than others as far as lower down payments and things of that nature. So let's say you're doing an FHA loan, which is a federally insured loan. They usually require a minimum of 3.5% down. So sometimes that's a good idea. It's not always the best for everyone's situation, but if you can make the monthly payment work within that down payment, then that can be a great choice for you. So let's say as far as the down payment goes on that median house, you're going to be looking at a total down payment of $11,620 for 3.5%. And then let's say rough average of closing costs is around $10,000. So in total, you'd be looking at $21,620 for cash to close to get into your first house at that median price range. And then with that total upfront cost, you're looking at roughly a $2,200 to $2,300 mortgage payment. Of course, all these numbers can fluctuate dependent on credit history and things like that. But let's say you had a little more cash down. You had 10% down, so $33,200 plus your $10,000 in closing costs. You're looking at around $43,200 in order to close on that house in upfront costs, which brings your monthly mortgage down under $2,000 a month at $1,985. And then let's say you're looking to avoid PMI, private mortgage insurance. That's something that the lenders charge if you're financing over 80% of the loan, over 80% of the value. So let's say you're putting 20% down. You've saved up a bunch of money over a good amount of time. You have $66,400 to place as a down payment, plus $10,000 for the closing costs. So you'd have a total of $76,400, and that brings your monthly payment down to $1,765. So not a massive difference between the 10% and 20% down. So that would have to be up to you whether it's actually worth putting that additional cash down or keeping that in your pocket for additional things, maybe furniture or stuff like that, things that people don't really think of. When you move into the house, you still have a lot of things you got to pay for. But that's not all. So you still have to consider property taxes and homeowners insurance with that. So if we break down the total costs, property taxes in Lancaster County average around 1.55% actually right now of the home's value. So that comes out to about $430 a month. And then you add in homeowners insurance, which is typically around $100 a month, again, depending on the home, area, all of those things. So your total costs would look more like this. With the 3.5% FHA loan down, you'd be at around $2,800 per month. With the 10% down option, you had about $2,500 a month, $2,515. And then with the 20% down option, you're looking at a total payment of $2,295. So that's with taxes and insurance being escrowed, being paid monthly, assuming you did not pay those up front with the closing costs. So how much do you really need to make in order to afford this? Now, a big piece of the puzzle is actually coming up with the down payment. So what I always suggest to anyone who's starting the process of looking to buy a home in the future. Anytime someone tells me, well, I want to buy a house, but in a year or two when I'm ready, I always tell them they need to get on a budget so that every dollar that they make has a name to it. So they're not wasting money and they can get into their dream home, or at least their starter home, sooner rather than later. Because the best time to buy a house was 20 years ago, but the second best time is right now. So the sooner we can get the funds saved up for the down payment, obviously, the better that's going to be for you and your long-term financial future. So as far as income is concerned, lenders typically follow the 28% rule, meaning your housing costs shouldn't exceed 28% of your gross monthly income. So based on that, here's what you should be earning annually. For the 3.5% down FHA, you would want to be making around $120,000 a year total household income. So if you have two incomes, combine the two. If you put 10% down, you'd need to make around $108,000 to support that monthly payment. And if you're able to come up with the 20%, you would need to make around $98,000 per year to support that payment. So again, if you can come up with the money down, it doesn't take a crazy income. Now, of course, saying six figures isn't a crazy income these days is pretty wild, but at the end of the day, it's all about how you're able to budget the money that comes in. So remember, if you have any other debts like student loans or car payments, you may need to make more in order to qualify. But if you don't have any other debts or payments or anything like that, this could definitely work for you. So if you are looking to buy in Lancaster County, now you have a little more of a clear picture of what it takes. So if you found this helpful, make sure to like this video, subscribe for more local real estate updates in the Lancaster area. And if you're ready to start your home search or have questions about financing, reach out to me. I'd love to help you find the perfect home and potentially get you connected with one of my mortgage lenders that I work with so we can get you pre-approved, get some more concrete numbers for you yourself. So I'll see you guys in the next video.